Today we'll look at equity markets and try to understand if the current correction to the downside is coming to an end or if we still need to watch out over the next few weeks. We'll go on to our FinGraphs platform and first look at a longer term chart, a weekly chart or the perspective over the next few quarters. This is a weekly chart of the S&P 500. As you can see, it is still in an uptrend for now, but this uptrend is slowly getting exhausted. Indeed, prices have reached the zone of our impulsive targets up, and they are now labeled done. So although the trend is still up, we believe the potential to the upside over the next few quarters is probably very limited. What we can see also is that our risks index has approached the overbought zone and is almost in the red band here. And this should probably trigger some correction over the next few quarters. So what we could say about the long-term perspective of the S&P is that it's still trending up, but that its uptrend is slowly reaching exhaustion. Now looking at the daily, the S&P 500 is already correcting. We could see that it had a first move down on the Volmageddon event in early February, and that we've just seen a second leg down over the last few weeks. Now we're reacting since Friday, but at the moment our trend indicator is still in a bearish mode, and we can see that the potential down, or impulsive potential down, is still quite scary and can lead us back down between 2,500 and possibly down to 2,400. The risk index did top out in January and is consolidating down. It's not yet oversold, nor it is reaccelerating up. So at the moment, we believe that given this risk that we could see on our impulsive targets down, the risk reward is probably still disadvantageous on the S&P 500, and we would require a bit more patience before we could try to buy the dips at this stage. Now looking at the hourly chart, we can see a nice reaction over the last 36 hours from Friday. The move down was exhausted. We could see that our envelopes were touching each other. But on the other hand, our risk index was not quite oversold yet. And our trend indicator is still heading down, and it's showing targets down between 2,574 down to possibly 2,500. Hence, we believe that this reaction up, for now, is only an intermediate correction, and that the probability is that we will see a continuation of the downtrend over the next 2 weeks. Now, to summarize it, we are pretty much exhausted on our weekly chart to the upside, so we would not expect much further potential. The daily is heading lower. It doesn't have a significant bottom yet on which we could find support, and we would still see risk over the next, possibly the next few months. And so at the moment, it's still too early in our view to buy the dips. A first opportunity to do so may emerge over the next few weeks, but at the moment the reaction that we're seeing is probably just an intermediate reaction, and we would expect further downside possibly into the second week, possibly into mid-April. Now looking at the Euro stocks, we first look at the weekly chart. The weekly chart is still trending up at the moment, although we have seen quite a strong correction in prices since the fall. Our impulsive targets up could still justify that we could make it back above 4,000 over the next few quarters. Our risk index is in the middle of the range, and what we will want to say is that we would probably want to see more price action and positive price action into the spring to be able to reconfirm this strong uptrend. So at the moment, we'll probably put it in between parentheses. Now looking at the daily graph, it is less appealing. It is in a downtrend, it is heading lower, it probably has more risk towards the 3,260 level and possibly down to the 3,125 level. So that's some risk still to come, and hence we remain on the prudent side on the Euro Stoxx 50. That said, we can see an intermediate bounce. Our risk index is quite oversold at the moment. yet again, we still believe that any intermediate bout should probably be sold for more weakness into probably the second half of April, even May. Now, looking at the hourly chart, we could well see the bounce that we are experiencing at the moment. The risk index was here oversold, and our envelopes were also touching each other. That said, the trend here is also still heading down, possibly down to 3,257 and possibly even below 3,200. So also here, following this bounce that we are currently seeing, we would expect a resumed downtrend situation, possibly still over the next few weeks. Now, to summarize the Euro stocks, still in an uptrend on the long term, but we would put it into parentheses, awaiting confirmation. And in the meantime, the daily is still heading lower with some risk to the downside over the next month or so. And the hourly chart is bouncing on an intermediate low, but we believe could resume lower, possibly also into mid-April. Now, looking at the euro, we would probably have expected that during a risk-off, it would have corrected with other risk assets. Indeed, since 2017, it has followed reflation and risk assets up quite nicely. That said, we are expecting that it may come into a zone where it could work in a consolidation, and that's actually happening at the moment. Indeed, we have reached the upper end of our corrective targets up, around 125, and usually such levels do work as strong resistance. Now, to get more precise, we look at the daily, and we can see that we made it up to an impact on our envelopes back in late January, had a retest in February. Our risk index was almost overbought, and we are currently consolidating at high levels. We are also quite exhausted on price. We have reached our impulsive targets up between 122.50 and 126, and as this correction materializes, we believe it may probably linger on a while longer. So we are currently trying to break out, but would expect, and as is happening today, and let's see if it can be confirmed in a wider manner, we would expect one more reset over the next few weeks before the euro can finally break up to the upside above the 125 mark. Now, looking at the hourly, we can see that we did have quite a bit more potential, probably signaling a breakout between 125.60 and 126.80. But our envelopes were touching each other, and our risk index was already in overbought. And it does seem like at least a temporary setback has started. So will it be confirmed over the next few days? Can it really create a retracement, possibly back to the bottom of the range? We believe it's possible, but would still need to see some negative price action over the next 2 days to confirm it. But in general, a lot of resistance here, a lot of resistance on the top of our corrective targets on the weekly chart. Our daily chart is exhausted, has reached its targets, is not too far from the overbought, so hence the high-level consolidation that we're currently seeing. And the hourly does show some potential, but it does seem that our envelopes are at stress and that it is overbought. So our view is that over the next few weeks, we could probably see some retracement before we finally accelerate up and break above the 125 levels. Moving on, we also look at cable, which is quite similar. It has also entered the corrective zone to the upside on a long-term chart and is working its way through this resistance. On the daily graph, it has reached its targets up. It has had at least one impact on our envelopes. The risk index is also quite high. Also for us, a high-level consolidation. And a high-level consolidation that may be retracing once again on our hourly chart. We could see that we had almost reached our targets up around the above 142, and that our risk index was very much overbought. And so we could expect here some retracement, possibly down to the lower end of the range over the next few weeks before the cable finally accelerates up and breaks above the January highs. the strength recently of the euro and cable was probably attributable to the strong move up that we've seen on political risk and effectively the nomination of John Bolton at Foreign Affairs in the US, and possibly doubts cast over the Iranian nuclear for oil deal. We can see that oil on this political risk has been very, very strong over the last few weeks. And oil has been very much linked and correlated with cable and eurodollar over the last year. And what we could see here is that oil is in a similar situation. It is also working through a resistance here of its corrective targets up. It made an intermediate top in January and is consolidating at high levels and is currently retesting these highs. And on the hourly chart, there's possibly slightly more to go, but the uptrend is slowly getting exhausted, and we've pretty much reached the overbought zone on our risk index. And so also here we would expect some retracement down, possibly over the next few weeks, before oil finally reaccelerates up once again. And we believe that above these resistance at 71, there's probably quite a bit of upside, because if you look at a long-term chart, you could see that once we clear these levels, there's very few historical resistance to be seen until we possibly reach the high 90s, perhaps even the 100 level. Thank you very much. Have a happy Easter.